Hi, and welcome to Sisters for Financial Independence. In today's video, we are going to learn all about target date funds. By the end of this video, you will learn what a target date fund is, you will learn how to identify target date funds, and you will see if a target date fund is a right investment for you. Thanks so much for tuning in. My name is Catherine Agupchan, and here at Sisters for Fi, we help you manage your money better so that you can live a life of impact today and tomorrow. Now let's jump in and see what a target date fund is.
Target date funds allow investors to choose a fund optimized for a specific time frame. The portfolio asset allocation in the target fund becomes more conservative as the target date approaches. Target date funds are very popular for retirement and education. Here's how target funds work. So if you invest in a target date fund, you will select a fund that has a target date for either retirement or education or whatever your goal is. Generally, the further you are from your target date goal, the more likely your fund will favor stocks over bonds, so it can grow aggressively. As you near your target date, the fund will automatically move towards bonds to protect your assets and reduce volatility, ensuring you have a stable next egg. What are the advantages of a target date fund? The big thing is that it works on an automated asset allocation formula. So it assumes you will retire in a certain year and adjusts the asset allocation as it gets closer for that year. Another big thing too is that it has the diversification built in already because it's investing again in a fund with a portfolio of stocks. Many of these target funds have low fees, though it's important to review those fees right before you invest. And the last thing is the simplicity. You're basically just choosing a target date fund and letting that invest until your target goal is reached. What are the disadvantages of a target date fund? There are some funds that have very high fees, so it's important to review those fees and if there's an alternative that you can invest in. A disadvantage of target date funds too is that it leans conservative. So target date funds are designed to move to a more conservative funding position to preserve your assets, especially as you get closer to your target date. And if your retirement is fast approaching, but the balance in your account isn't enough to meet your retirement needs, the allocation change may leave you, as the investor, with a fund that does not provide the returns you're looking for. So it's important to also review those funds, even though it's meant to be set it and forget it, to review it as your goals near, so that if necessary, you can make the right asset allocation changes. How do you identify target date funds? These funds are fairly easy to spot because there is a date on them. So here's some examples from popular investment firms. You have Fidelity, and it's called Freedom 2045. So the goal is you would retire at 2045, and with that fund, it'll automatically adjust the asset allocation as we get nearer to 2045. The same thing for the Target Retirement 2045 for Vanguard, Schwab, and T. Rowe Price. If you invest within an employer-sponsored retirement account, there's a high likelihood that you will see target date funds in there. So this can be a good option for you to add instant diversification to your portfolio. But it's important to keep the management fees in mind so that you are not overpaying for these funds. We are going to review the stock chart for the Vanguard Target Retirement 2045 Target Date Fund. And I just want us to see some of the information we can glean from the charts. Of course, we see our ticker symbol in our name and our price. And under summary, we see our previous close, year-to-date return, as well as expense ratio and its category for Target Date Fund 2045. Under profile, we'll see what this particular target date fund is about. And scroll to the bottom, we'll see the fund summary and about the particular fund is for those investors planning to retire and leave the workforce in or within a few years of 2045. That's the target year. Your annual expense report ratio is 0.15%. Let's scroll up a little bit more and go under holdings. And here for this particular fund, it holds around 90% in stocks, 10% in bonds. So that is a pretty aggressive asset allocation because it's a 2045 target date. If we scroll further, we see its sector weightings. This one leans very heavily on technology at around 18.87%. And scroll further down, we'll also see what it holds. Now, within this fund, you'll notice it actually holds other funds as well. So within this fund, it holds total stock market, total international stock market, your total bond market, and two total international bond markets. And again, that's about the 90-10% weighting. Of course, if you remember the target date fund, as you get near to your target date, you'll start shifting in asset allocation so that you lean more conservative and you have the capital available when you're ready to withdraw. Let's look at a target date fund that is within a few years. This one is the Vanguard Target Retirement 2045 VTTVX. Again, we see the same information here for price, and I am actually going to navigate directly to holdings so that we see what it currently holds. Now, this is for someone that is investing in this, it would be want to retire within a few years. So if we look at its composition, around 58% in stocks and bonds, and then let's scroll all the way to the bottom to see what it's made out of. So we still see similar funds here with the total stock market, international stock market, bonds, and so forth. But we now see the percentage of assets change a little bit. So total assets in stock is now a little bit less than the 2045 target date fund, and we now see more bond holdings, again, to preserve that money should there be volatility with the market, as also to ensure that there's cash available for the investor when they're ready to withdraw from the fund. And then if you go to purchase info, you'll also see that this particular target date fund has a minimum initial investment of $1,000.
As we have learned in our example, target date funds are normally made out of funds. So it is a fund of funds. And when you dive deep into that fund, you'll see what it's made out of. Now, we also saw that in the Vanguard example of a target date fund, we saw that this Vanguard fund was made up of around 6 funds, and the funds are allocated against stocks and bonds. Most target date funds follow the approach of a 3-fund portfolio, or a portfolio that diversifies and splits your asset allocation across stocks and bonds. If you want to learn more about the 3-fund portfolio, I would recommend watching this video here where we talk about the 3-fund portfolio. Target date funds are a very simple way and yet effective way to invest in the market. If you're just starting out and you are investing in your first 401k or 403b or employer-sponsored account, you will see a lot of these target date funds listed. What you'll want to do is look for a target date fund that has low expense ratios and provides you that diversification. So it should be invested in stocks and bonds. And if you are just starting, say you are just in your 20s and you have a long way to go before you reach your other goals to retire, you might want to go aggressive. So look for target date funds that are a little bit more aggressive, that might be more in stocks, so that you can grow your money further. If you found value in this video, give it a like and share it with a friend. There might be someone you know who is looking to understand more about investing and the types of available investment options out there. If this is the first time you've ever heard of a target date fund, I would recommend picking up an investing book. We have some recommendations and suggestions in the description below, and find one at your local library or pick one up off of Amazon. We also have a class here at Sisters for Fi called Investing 101, specifically for first-generation wealth builders. In that self-paced class, you will learn all about the different kinds of investment accounts, which investment account reduces tax liability, and what type of investments you can put into those accounts. If you want to learn more, check out the link in the description. There's a special code for you to use to get a discount of 20% off that class. Let me know in the comments if you have any questions about the Target Date Fund. The Target Date Fund can be a great solution for today. I don't want you to wait to invest to find the right investment, because there is no such thing. If you have access to target date funds through your employer-sponsored account, that might be the solution for today. As your investment knowledge grows and as you become more familiar with investing, you can then diversify to other investment options. But for now, if you're just starting, I believe the target date fund can be a great start for someone. And I also want you to, instead of finding the perfect investment, focus on getting more money towards your investments. Focus on automating your investments so that you are making that consistent habit of putting money away. If you want more money lessons, don't forget to subscribe to Sisters for Fi. Again, thank you so much for tuning in. I will see you in the next video, which will drop next week.